Welcome back to Market on Close. Just a few minutes left in the trading day. That means it's time for the big picture. Let's welcome in our guests from Charles Schwab. Today joining us, we have Liz Ann Sonders, Chief Investment Strategist at Charles Schwab, and Mike Townsend, the Managing Director for Legislative and Regulatory Affairs, also, of course, at Charles Schwab. Thank you both for joining us today.
Nice to see you.
Nice to see you as well. Now, it looks like investors are looking past these global trade tensions that we're seeing for the day. We saw a dip in the morning. As I look at the board right now, lots of green. Liz, what's your take on this? Are we just getting used to the headlines or positivity in our future?
I think we are getting used to the headlines. I think the risk, if the market were to continue to rally here without commensurate true de-escalation in the tariff front, is that you might build a bit of complacency in terms of the impact. Admittedly, we have seen a lot of data not reflect this yet in terms of tariff impact. I think the inflation data, the reference period for it was only up to a point where you still had less than 5% as an average effective tariff rate. So I think the inflation hit is still to come. I think Friday's jobs report is incredibly important to see whether we continue to see some convergence with some soft data improvement, but hard data deceleration. So that's what's on my radar screen for this week.
And staying with that jobs data report, Liz, what are your expectations there? What do you think we're going to see in terms of non-farm payrolls?
Oh, I don't ever attempt to forecast what an economic data point is going to be. The consensus, I think, is somewhere around 130,000 on payrolls. What'll be interesting is what we've seen in the sort of wide variety of labor market data is a sign that there is still some labor hoarding, to use a phrase that became popular in the aftermath of the pandemic, which means you're not seeing a lot of layoffs, but you have seen a pretty significant deterioration in the hiring front. So not a lot of hiring, but not a lot of firing. And that reflects why unemployment claims, initial unemployment claims, although have ticked up a bit, have not been in egregious territory, yet continuing claims are now at a cycle high, meaning it's more difficult for people who have been laid off to find a job. So that's another reason why I think Friday's labor market report is going to be really important. What it is, really difficult to say in this kind of backdrop.
Well, I'll certainly be waiting to hear because, as you know, the Fed's wait and see policy, and that's a big part of it. So we'll all be listening. Now, Mike, I want to send it over to you. Obviously, legislative and regulatory affairs. I imagine the one big beautiful bill is something that is constantly on your radar. You know, as it has made its way now into the Senate, you know, what are you expecting to see in terms of changes there?
Yeah, Marley, I think that's a key question because the House passed that bill by a single vote, 215 to 214. So there's not a lot of wiggle room. And of course, now that it's going to the Senate, it's going to change. And to me, what to watch is how much does it change? There are a whole bunch of issues that senators are concerned about, but they're sometimes concerned in opposing ways. So you have some who think there are too many spending cuts. There are some who think there are too few spending cuts. You've got a bunch of tax questions around the state and local tax deduction, around green energy tax credits that there are different opinions in the Senate on. So I think what you're going to see over the next 2 to 3 weeks is not a lot of visible action. You're going to see some sort of behind the scenes negotiation while the Senate tries to figure out what its package will look like. And you'll probably see that come onto the Senate floor in the second half of June and then try to move forward before that July 4th recess. At that point, then it has to go back to the House. And that's where I think things could get really tricky, because if the Senate changes it too much, you're going to upset that delicate balance that got it passed in the House. So lots more twists and turns to come, I think.
And as you mentioned, just that one singular vote allowing that pass. Do you think once it goes back to the House, do you expect it to pass?
You know, I think the president has incredible leverage here. He's shown time and time again that he can twist enough arms to get it across the finish line. So I certainly do think it'll pass at some point. It may not be until, after July 4th, sometime in mid-July. But the other thing that's a pressure point here, Marley, is the debt ceiling, because contained in this bill is an increase in the debt ceiling. That's really, really important to the markets. The markets don't want to see some last-minute, last-ditch effort to try to avoid default. So I think that's going to be a driving factor, and that'll push Congress to get this across the finish line sometime in July.
Yeah, everyone's shooting before the holiday, right? That's what we're hoping for. Now, staying with you, Mike, I want to talk about the other thing we're keeping an eye on in terms of with the government in the next couple weeks are the appeals of the tariffs and the back and forth rulings that we've seen over the past couple weeks, and then the appeals that we'll see in the coming weeks. How long do you think we'll see that uncertainty continue, or do you think that we'll have some more declarative answers in the coming weeks?
Well, like Liz Ann said about trying to make predictions, I have given up making predictions about what the courts are going to do on this. But you're right. We have sort of this back and forth. The U.S. Court on International Trade paused most of the tariffs, and then the appeals court put them back in place. So we've got a couple weeks here for them to gather information from both sides on the appeal, and they'll make their decision sometime probably later this month. I think it's inevitable that this all goes to the Supreme Court, and the Supreme Court will have the final decision, and who knows how long that will take. But I think this produces this atmosphere of uncertainty for companies going forward for quite a while, and that's going to be true for companies, for foreign countries trying to make trade deals, whether they should wait for these court decisions to happen, and of course for the economy. So I think uncertainty is going to continue to be the watchword with tariffs.
And Liz Ann, I want to take it back to you now with that uncertainty Mike is mentioning. How do you think the markets are going to respond to this uncertainty that we've pretty much guaranteed for the coming weeks? Do you think that we'll see a month more like May, or are we going to return to things that looked more like April?
Well, it depends on what the actual announcements are in the back and forth. If you look at a metric like the U.S. Trade Policy Uncertainty Index, it could be tracked on various sites, including Bloomberg, and that has had a direct correlation to short-term market moves in the S&P 500. So I think as a proxy for what the market's going to do, that type of policy uncertainty index has sort of nailed it with a little bit of lead time. So I think we are still maybe not to the extremes that we saw leading into the lows in early April and then the rebound since then. But I think trade, and especially a lot of this sort of these court battles, are going to define some of the shorter term movements in equities. I don't think we get out of that picture anytime soon.
Thank you so much both for your time on this Monday afternoon. We really appreciate it. Again, Liz Ann Sonders, the Chief Investment Strategist at Charles Schwab, and Mike Townsend, Managing Director for Legislative and Regulatory Affairs at Charles Schwab.